Manchester United has a $300 million IPO scheduled. Unfortunately for the company, net income has come down, revenue has come down. Having said all that, this is a 134-year-old sports franchise in France. Very rare do shareholders get a chance to invest in a sports company. Manchester United has a huge fan base. I would think, even though these numbers don't look great, there's going to be a lot of demand for this stock.
I'm not so sure. It's the Glazer family bought it in 2005 for about $1.25 billion, and they've sucked out as much money as they can. It's a typical leverage buyout deal, and so what they want to do is evaluate at about $3 billion, and their revenue was off for the June year. Their earnings compared to the year before went from plus 20 million to minus 10 million, and if you take out the tax credit, that doesn't count. Their operating earnings have been in a steady decline for the last 3 years. Now, what they'll tell you is they have network contracts going forward. They'll say that they're expanding. They're a soccer team. It's Manchester United soccer team, and typically they're at the top of the heap over there in the UK. But one of the risk factors is that, if they have a losing season, they're going to lose a lot of their fan base. That what they're doing is making more money from the commercial sector. Their match day revenue is going down. Their broadcast revenue is going down. They're starting to make decent money on mobile because people are starting to follow them there. And they've got a licensing agreement going with Nike. So that all sounds good. But as you said, it's been around a long time. I think it's really been worked over by the family. I think that it's true that the June quarter is seasonally low for them. They look kind of okay going into the 9 months because I looked at this financials, but the June quarter was just a disaster. And I think it's hard for a company to IPO when they go into the IPO just having a very bad quarter. I would have expected it to be at least the same as the prior year because the 9 months results were up and they were starting to look good. So it's got a lot of hair on it with the family, Glazer, and it's got too much debt, and it's had a bad quarter going into the IPO. So I would not buy it at the $3 billion market, the midpoint of the price range.
All right, so if you're buying it, you're only buying it as a true fan and not as a true investor.